Welcome back, folks. You're looking at a chart of gold. Daily chart. Okay, gold has been quite difficult to trade over the last couple of weeks. I've been taking a lot of scalp trades. You've seen them. I journaled them on my Twitter profile. On this daily chart, this is going to become our bullish order block. Okay, order flow is bullish on gold. Let's talk about this in a bit more detail. So if we look at this down candle, okay, this down candle has come into these two down candles, which are the previous bullish order block. Okay, now all these other movements are just coming into this down candle. This is just building more orders. That's how I see this. Okay, and this is indicative of a very strong market. Okay, if I take the midpoint of this down candle, you can see that all of this movement over the last couple of days is held by the midpoint of that down candle. Okay, this is bullish momentum. Okay, so this down candle also is going to be our bullish order block. You can see how well the market has respected the midpoint of that down candle, which is the original bullish order block coming into these two down candles. Okay, so I see all of this as bullish. Obviously, I can be wrong because we are at premium pricing. Okay, so we couldn't get down to that 2470 level, and we got close to it, but we didn't break through, and we still haven't gone through the weekly fair value gap that I've been talking about. Okay, nor have we come into the weekly bullish order block. So that is a concern for me, and that's why I'm simply scalping. Okay, because there's a bit of uncertainty in the direction. But for now, I think that this will be the draw on liquidity. Okay, those highs I do believe will be taken. Okay, so I think that's going to be the draw on liquidity, and we might get that this week. Okay, at which point I do believe that we will get a reasonable pullback. But it's quite difficult at the moment, quite tricky because of what we're seeing here on the daily charts. Okay, quite bullish signatures. Even if we drop down to a 4-hourly chart, okay, the move last week was simply down into these two down candles, right? The 4-hourly bullish order block from where we have had a reaction. This is now another 4-hourly bullish order block. Again, the market has simply been coming down into that bullish order block on this 4-hourly chart. Also, notice how we've been respecting this fair value gap. This has been reclaimed multiple times. Okay, once the market has come back down into this down candle, which is the 4-hourly bullish order block, okay, the market has been respecting that fair value gap. The midpoint of that fair value gap has offered support, as well as the high end of this 4-hourly bullish order block. We've simply been coming down into there and having good price reaction. What I don't like is this choppiness. There's a lot of choppiness in this move, okay, and that's why I do believe we are going to have some level of pullback, okay, so that's kind of what I'm looking for. But I think that liquidity that resides above these levels, I think that will be taken. I think that will be taken this week, okay, so it is tricky, and that's why I've only been taking scalp trades, because even if we look at a 15-minute chart, okay, it's very, very, very choppy, right? When I see this kind of choppiness in the market, like this is to me just a pullback, okay, it's not an impulsive move up. We've now come into this fair value gap, the last portion of it, okay, you know, maybe that's enough of where it wants to go for a decent pullback because of this choppiness, right? That's why I believe this is just a crawl back up to some level, maybe here, for the market to come and rebalance, okay? So I'm going to be watching the market at these specific times. So we do have news today at 8:30, right? So we have heavy USD news today and tomorrow. So these are going to be the key times. Okay, so very tricky. I think it's going to be very volatile and a lot of manipulation, right? We have liquidity residing above on the daily chart, okay, and we have liquidity residing below. This is low resistance, okay, because this here is a lower high than this, so the market should have very little resistance in getting above those highs there. Okay, that'll be a new all-time high again in gold. Okay, it's not far away, so you know, that should be something the market reaches for. The issue is the choppiness. Okay, very, very choppy, and therefore it's not an impulsive move that when I see this price action, I kind of understand this to be a crawl up to rebalance. The market's reaching for something. So timing is going to be the key, right? You've got to look at what's going on at these levels at the right time, whether that's in the Asia session, right? For me, if I'm trading Asia, I want to be looking at 9:30 p.m. If it's London, I want to be looking at 2:30 a.m. or 3:30 a.m. Okay, that's kind of the key times the market moves for London. If it's New York, then the key time is going to be at 9:30 a.m. or 10 a.m. So it's all going to come down to time and what price does at that time, where's price at that time, and how price behaves. Okay, so let's look at a couple of questions you guys have had. Okay, you've had a question about entry on this trade. I am surprised that there's questions on this. It's quite straightforward. Okay, this is, and I've mentioned this on multiple videos, how I've entered on this trade. So this trade was entered on a 5-minute chart. It's going to be hard for me to find. Let me get rid of all these lines. It's going to be difficult. What day was that? That was 9th of September. So that was Monday. Okay, that's the London trade from memory. So if I jump to, there we go, there he's there. I mean, this, even just by scrolling back, I can see it. It should be straightforward, just sticking out right on the chart. So that's the trade. I don't know why you're having so many questions on this. It's very straightforward. Now, I use a 1-minute time frame to enter my trades, okay? And there's a lot of variations on what I look for on that 1 minute chart that you're only going to get by monitoring the 1 minute time frame live. Okay. I don't expect you to get that until you watch the market all day, every day. Like I've been watching these markets for 10 years. Okay. Every single day live, minute by minute. That has what has trained my eyes to see what I see. Okay. You're not going to get that just by watching a couple of videos. I guarantee you that, right? You got to study. What I'm giving you is the easy entry. Okay. I will show you the 1 minute entry when it's clear and it's easy to understand. But most of the time, the 1 minute entry is difficult and there's many different variations. But most importantly, it's actually to do with the speed of the candles. Okay. So this on a 5 minute chart is the easiest entry. Okay. Because you take liquidity, right? The market takes liquidity. At that point, it's 2:30. I'm looking at the 1 minute chart at that point in time. Okay. Now, I think I did record this on a 1 minute time frame and entered, but you're confused because you don't know why. And that's understandable because you won't know until you study the charts. And there's so many different variations of what a reversal looks like on a 1 minute chart that I can't go through all of them. Okay. And sometimes it's hard to explain as well because it's just looking at the candles, how fast those candles are moving and how quickly the market is rejecting that level on a 1 minute time frame. Okay. Usually I like to see a balanced price range, right? Or a bullish order block form on a 1 minute time frame. Just like here, I would see this, what we're seeing here on a 5 minute, on a 1 minute as well, or some variation of that. Okay. I'm looking for that at this time when the market takes that liquidity, right? I don't always explain that because they're quite difficult to explain. Okay. And at that time, I'm really focused on my trade, right? So I'm focused because my job is to trade the markets. Okay. You have to pick up what I'm doing by looking at the charts, going back and studying it. Okay. I will explain where I can, but most of the time I'm focused on entering in my trade. Okay. That's why sometimes I'll come back later and talk about it in different videos, maybe not on that exact video. Okay. So this trade is easy to see on a 5 minute chart. You've got liquidity that has been taken at 2:30 a.m. You've got these two down candles, which are your bullish order block. Okay. You've got displacement and move up through those two down candles. And then the market comes back into the bullish order block and you have this consolidation. That's it. Like, I can't get any easier than that. Look at the time, 3 a.m., 3:30 a.m., 2:30 a.m. They're the best times for London. Okay. Then you just want to define some level of exit, which can be this fair value gap at the top, right? And that's the move there. Now I held on to this because on a 1 minute time frame, I saw some equal highs. I like to target equal highs. Someone said that I'm counting pips. Like, I don't care about the pips. You will see that I set a target and I don't move until that target's hit. That was my target, the equal highs up there. That is not always the best exit, right? But I want to be in and out. That particular position was significant in size, okay? That was the second portion, 2.5 lights. It was the earlier portion of an 8 light that I took here. You can see it there. Closed 8 light inside that fair value gap, right? I want to be in and out. So I'm not looking for the best exit. I'm looking for a logical exit where I think the market will head to with very little resistance, okay? Now, sometimes you'll see me grab this measuring tool and go up and see how many pips is that. That's not me counting pips. Don't assume you know what I'm doing, right? You can ask and I'll tell you what I'm doing, but don't assume you know what I'm doing. I don't care about the pips, right? I'm looking to see that I'm measuring that movement, okay? Because I want to see, is that movement in alignment with what I'm expecting this to be as a range expansion, okay? So it's not about counting pips. Like, don't assume you know what I'm doing when you see me working on my chart. That's me managing my trade, okay? It's not about the pips. It's about getting, setting a target at a level where I believe the market needs to reach, which is equal highs in most of the time, or balancing a level of inefficiency. In this trade, I took off a large portion of my trade at this inefficiency. Then the next level was at these equal highs, which are visible on a 1 minute chart. Okay, nothing to do with the pips. It's got nothing to do with it. When I'm measuring the movement using the measuring tool, I'm measuring to see, okay, is that movement, right, in alignment with my expected range expansion, right? Okay, so the other trade that I also want to talk about that you have asked about is, where is it? Actually, it's one that I did yesterday. I'll talk about that one as well. Yesterday's entry was, again, pretty easy, and I have done a video on it, so I'm not sure why you're asking me about it. There's a video that talks about the entry precisely. Okay, now I entered this on a 1 minute time frame, as you can see in the video, but I've got multiple screens open. Okay, I've got my 5 minute chart on a screen, 50 minute on a screen, my hourly and 4 hourly, right? They're all separate screens. That's how I trade. Okay, now timing's important, right? You won't see this on a 1 minute, right? I'm watching this on a 5 minute as well as on a 1 minute. Okay, and the screen I'm recording is usually my main screen, and that's usually on the 1 minute time frame. Okay, so here it's easy. Okay, this particular trade that I'm referring to is the last one that I did last night. This one here, you can see that's a 1 minute time frame. Even on 1 minute, I can see this, right? This is perfect entry on 1 minute. Okay, so the first thing I did was identify. Let's just jump into a 50-minute chart first. First thing I did was identify a fair value gap that the market might be reaching for. Okay, that fair value gap is clearly marked on this time frame. Okay, and I'm pretty sure in that video I actually mark out those levels, those fair value gaps in the video, so you should know which fair value gaps I've used, and I'm pretty sure I used an inversion fair value gap as well. Okay, but the entry basically is very straightforward, right? On this 5 minute chart, we have these 3 up candles, which are your bearish order block. Okay, and what time is all that happening? Look at the time down the bottom. It's 9:25 a.m. right? I want to trade at 9:30 a.m. I see this engulfment right at 9:30 a.m. that 5-minute candle that takes out all of these up candles. Okay, then this next 5-minute candle goes up into there, right? I'm already short at this point in time. I'm already anticipating this on a 1-minute chart. Okay, but the easy entry that is clearly visible is there. These 3 up candles, okay, this engulfment, all happening inside of the 9:30 a.m. candle. This candle pushing up into your bearish order block. That's it. It can't get any easier than that, right? You can take off the position here. Okay, I think that was around about 40 pips. You can take the position off here in this fair value gap. That was about 60 pips. Or the logical level would be to take it off at these lows. That was about 90 pips from memory. So the reason I'm mentioning pips is it gives you a way to identify a very easy trade where you can target 50, 60, or 70 pips, okay, which is the ideal profit target, okay, on gold, because it typically moves around that level if you have the right direction, okay? Now, I typically watch the clock, okay? If you watch that video, you'll see that I got a pinpoint sniper exit, right, into this fair value gap by understanding where these gaps are, where liquidity is. You saw that I took off a 5 lot right there, equal lows, and then I left the remainder of my position until we got to this level. But I'm watching the clock. I know 10:30 is important because I've mentioned to you in the past, 10 a.m. to 11 a.m. will often mark the low of the New York session. Okay? So, again, it's nothing to do with pips. I'm looking for very key price levels to be hit where liquidity resides and watching the clock. When I'm using the measuring tool, I'm measuring the movement to make sure it's in alignment with my expected range expansion. Okay? Not looking at pips at all. Another question I had was around about the DXY. Do I use DXY? I have an overview of DXY. I kind of understand where DXY is going. I might analyze it once in the entire week just to kind of see where is it at, but I'm not looking at DXY, the dollar index, for each one of my trades, okay? There used to be a time where the dollar index was heavily, or I should say gold was heavily correlated with the dollar index, but I think there's been a very significant decoupling over the last couple of years. If you do a study and measure the correlation, you'll actually find that there's been a significant decoupling between the dollar index and gold, but obviously gold is measured in US dollars, okay? So there is some level of correlation, but everything is in the charts, right, that I look at. I look at price action, and everything is in the charts that I need to see for me to take that trade, okay? So I hope the video is useful. I will now talk with you in a future video.